Hey folks, this is Rainer here from tradingwithrainer.com. Hope you guys are having a fantastic weekend and are spending some time with your loved ones, or perhaps even sleeping in on this rainy Sunday afternoon. As for me, I simply just woke up because I had a really late night yesterday and thus couldn't really wake up early this morning. So nonetheless, let's look at some charts and see what opportunities there are lying ahead this week. So for the first pair, let's look at the British pound dollar. This is the weekly chart, and I think I can zoom out. Don't really need. Let me just leave it as it is. All right, this is the pound dollar weekly chart, and what do we see here? Let me highlight to you some key levels. First one is this one here, between the 163 and 162 level. As you can see, that price has tested it numerous times. Right here, here. And there's this one big formation that's forming around this level again. So you can see that 1 time, 2 time, 3 time, and now it's attempting to test the 4th time. So will it break or will it hold? Let's look down in the daily chart to have sort of get more clues as to what price action is doing right now. So this is the daily chart. As you can see, price is forming some sort of potentially a triple top. Alright, so we can see here, here, and now price is here again. So what is my take on this? My take on this is that this pair is actually seems to be able to break up to the upside, right? We have this support down here at the 159 level, and right now price is attempting to break through this resistance zone down here. Right? I wouldn't go taking a shot immediately, but rather what I would do is actually wait for a candlestick formation at this zone down here. Alright? So the candlestick formation I'll be looking at is perhaps a really bearish pin bar like this, or an engulfing pattern. Alright? Either or. Right? Either this pattern or this pattern, I'll look to take a shot. Right? If none of this occurs, I'll just stay out of this trade entirely. Because given the fact that, why do I say so? Okay, let's go back to the weekly chart and let's examine further. Looking at the past few times of how price bounced off this level, the first time it came up, the next candlestick pattern was, I would say, a dark cloud cover, and it came down much lower, just that one pattern. The second time it came up, right, again, it formed another bearish candle and price came down pretty easily, right, rarely further up higher, form a pin bar, right, another bearish engulfing before coming down lower. But this time round, right, price has been hovering at this region for quite a while, right, 1 candle, 2, 3, 4, 5, 6, 7, 8, 8 candles, and it's still in this resistance zone. So the message is telling me is that if price was such an attractive level to be sold at, right, at this 162 and 163 level, it would have already come down instead of hovering down here. So this kind of aroused some suspicious in me, right? So I'll be careful in just simply going short at that resistance area. So I would rather wait for a confirmation of a candlestick pattern before going short. So that would be something to take note of, the British pound dollar. The next pair I'll be looking at would be, let's see, Canadian yen. Alright, let's do it. Canadian yen, right? This is the weekly chart. As you can see, this pair is still technically in an uptrend. We have higher lows, 1, 2, 3, and right now price actually ranging between the 97 and the 92 level. So my bias on this is actually still towards the upside, but given the fact that it's actually ranging since sometime in May this year, this actually could actually give us potential short or long opportunity as price comes toward the resistance and the support respectively. So looking at the daily chart, I'll zoom out a little, and here's how I actually go for this short. I wouldn't want to simply short at this level again for the reason that I just mentioned. It is an uptrend, but rather how I go about playing this setup is actually I'll wait for another candlestick formation at this level before taking a shot. And as you've known, most other yen pairs are actually rallying pretty hard, like the British pound yen, the euro yen, right? So this tells us that there's actually yen weakness across the board. So we wouldn't want to go short against a pretty weak pair, because that's not a really high probability trade. So what I'll do is actually, instead of shorting simply at this resistance level, I'll wait for a pin bar or an engulfing pattern before going short at this area. So that would be my take for the Canadian yen. Another pair we'll look at is the New Zealand dollar. Right? It was a setup I actually mentioned last week. Right, this is the weekly chart again, and I did say that this resistance here will be a level to look out for, and there was actually a potential head and shoulder pattern that was forming up during the week. So that actually did occur, as we can see now that the right shoulder is clearly completed. This is the left shoulder, the head, and the right shoulder. Price came down here, retested the right shoulder one more time, and now it came back down lower. So where did it close at? The neckline, obviously. So this is the neckline of the head and shoulders pattern. For those of you who attempted a shot at this right shoulder down here, I would highly suggest that you set your trade to break even when price approach this neckline over here, which is about now. Set it to break even. Why do I say that? Because if this neckline is supposed to hold, there is no reason for price actually not to head up higher, alright? And could even eventually come back towards this, what you call this, the head of the head and shoulder pattern. So we do not know what will happen. So I would actually suggest setting to break even and let this trade plays out. It could break down lower, or it could come up higher, retrace, and come down lower again. I really don't know, but these are all the kind of scenarios that could actually happen in the world of trading. So we can only manage our risk, and my suggestion to you is actually set it to break even as of now, for those of you who have taken the shot on the New Zealand dollar. So that's all for the setups that I would like to cover through. But however, there are a few pairs, alright, which I thought was quite interesting. However, they are not setups, but rather they are actually facts that have already occurred. However, they are actually setups that I would have taken had I seen them, right? They're all the same setups that I always mention, the pin bar and engulfing. And there's actually two pairs that I would like to share with you today, which have already happened after the fact. But nonetheless, we all can actually learn something from this, and let's see which pair is it. The first one I want to share with you is actually the Aussie Canadian weekly. It's a very, very simple trade, right? We know that this pair has been quite a massive, I would say, long downtrend since early this year, as the Aussie dollar has been selling off. So this is a monthly chart, right? Actually, the weekly chart is sufficient. We look at the weekly chart, and we can see something here. You can see that previously we have support coming in at the 99 level, one time, two time. This almost make it, so let's count it as well, 3 times, 4 times. Then price break down this support level, right, to a low of the 91 level here. Then price rarely back up, alright. And where did it terminate at? It did break out of this 99 level, and the next 2 candles we had a bearish engulfing pattern, which is a pattern that I frequently trade. So I did not take this setup personally, because at that point of time I didn't see it. And if you guys happen to take it, there's no reason for you to set it to break even right now and let this trade run out. So after this bearish engulfing pattern, what we have is just quite an easy down move towards the downside. So yep, the power of simple trend line, resistance, and candlestick pattern, right? The next setup that I'd like to show you guys would be here. Okay, another one, similar concept, I mean same concept, but just in a different context. This is a ranging market for the New Zealand Swiss franc. Resistance here 1 time, 2 time, the 3 time, and now you approach again here, and what do we have? My favorite, bearish pin bar that I always talk about. I'm not sure if you guys are already sick of hearing me mentioning over and over again. The bearish pin bar. And what happened next? This trade is a little trickier because price came down slightly lower before retracing upwards. So had you set to break even, you may get stopped out at break even for this trade, because that's what I would probably do, and I'll be stopped out for break even. But next thing we know, there's another short opportunity when price formed this bearish engulfing pattern. Let me clear up here. Alright, the first setup was here. This pin bar got out at break even because price retraced. There we have another setup, the bearish engulfing. This one will probably be in the money right now as price actually came down much lower. And where I look to take profits is either at this support level down here and see how price behave. It sort of like seems about to reverse back to the upside. I look to take profits here. If not, the next profit level could actually be at this 7150 level. So yep, just same old concepts I repeat over and over again, and they're actually very tradable setups. So I hope you guys actually find this useful, and thank you very much, and I wish you guys good luck and good trading. See you.